What is up, Benzinga Nation? All right, listen. We're all here for the Nvidia earnings call, but I got to ask you in the chat, how many of you got puts? How many of you got calls? Be honest with me. Let's throw up the good old chart here. So here's Nvidia. And I'm sure a lot of you are like, "Oh, this is neat." And then you started freaking out a little bit if you had some calls. And then you saw this little nice little bounce up and then you got excited. Now, obviously on the put side, if you had puts, you were celebrating right here at 421 Eastern. And then you went ahead and got a little bit scared. If you're just joining us for the first time, welcome. My name is Nate. I'll be your host for the 15-minute portion of this, and then we'll go to the earnings call. Then you don't have to see my face, hear my voice. We'll hear from the executives themselves of earnings for Nvidia. We're going to go through some charts and hang out and do all some fun stuff before we dive into the earnings call. But let's go ahead and take a look at some charts here. We've got a bunch of other earnings to go ahead and take a look at as well. You had Lucid, you had Rivian, you had Etsy, you had Bros, you had, TCOM as well. Now, here's what I've got on the chart, right? This is the 65-minute chart. You've got couple of hits, 1, 2, and then it kind of rejected this trend line here in the after hours yesterday. Now we can go ahead and see what's going on, chat. What's up, Easy Mike? What's up? It's good to see old faces, aka from today's trading show that we do from 9 to 11, and we've got some new shows going on as well. But let's see if Nvidia is able to go ahead and reclaim this trend line and then just get through this resistance level. I mean, that's what I'm keeping an eye on, right? Can we go ahead and break like this 742 area or not? You can see they beat on the EPS side. They went ahead and beat on the revenue side in terms of sales and the money that's coming in by 1.5 billion, give or take. So I mean, they're kicking, they're doing some great stuff out here. But all we care about is this going to be enough? I think they were expecting, what was it, a 11% move, I think is what the options market was anticipating. Let's see what we got here. Bring out our handy dandy ruler. And let's see, how big of a move is this? It's only an 8% move. So how much higher does this need to go for the folks who bought calls, just directionally, no spreads, no nothing? For the folks who bought calls, I need to know, where's your break even? Because I mean, I know people had purchased 760 calls. Right now, you're not really looking too pretty. I know folks who had 750 calls. I see someone in the chat saying NVIDIA to 1,000. Sanchez, I hope it does for you, but I'm not quite sure that happens this month. Let's see. Take a look at the daily. Obviously, we've been, marching on higher and higher and higher. Now, here is the thing. We've got about 12 minutes till the earnings call, which we will go ahead and stream for you right here. You can hear everything that they're saying. The things that I want to go ahead and focus on in terms of what I want to pay attention to is what happens with CUDA. What are the updates there that investors should know about? What's it going to be in terms of supply and demand, right? How many constraints are we really going to have? And are they able to meet the demand, and how quickly are they going to be able to do that? And then we got to talk about B100. What's the updates there? It's coming out later this year. How fast are we going to get it? Do we have any, sales or back orders or revenue from there that they can go to update on? And then, of course, I was hoping for a split. I'm not going to lie. I would have loved a split. I think everyone on Wall Street Bets would have gone nuts if we had a split or a dividend increase or something that kind of juices the headlines. But if they were going to do it, it would have been part of the earnings that was released. I don't see that happening on the call itself. We'll take a look at ARM here in a second as well. And then, of course, China, however you want to go ahead and say it, whatever your political affiliations are. All I care about is making money. Let's go and take a look at ARM because, that's going to be impacted. ARM, obviously going to move to the upside. Let's take a look at the charts here. Let's just get rid of all my drawings. Easy to identify support right here. Right? So obviously we're well above that 116, went ahead and held. Now I think you've got a little bit of resistance coming up around this 135, 136 area. As you can see, I've got look at that. I already got my alerts set because I'm ready. I'm ready for this to go to the upside. And if we break out of it, I want to be long to see if we can knock on the doors of 150 again and move on to the upside. By the way, this earnings call is sponsored and brought to you by Apex Trader Funding. They've got a 71% sale going on right now. Use promo code FEVER. It makes me look good and makes me look like I'm the biggest influencer when it comes to the Furu, FinTwit, YouTube market, whatever the case is. You can go ahead and pass an eval, get funded, and trade futures and get a chance to go to make money. If you haven't done it before and you want a chance to use somebody else's money, make sure you check out Apex Trader Funding, promo code Fever. Love it. Appreciate the help there. So that's what's going on with ARM. Let's take a look at NVIDIA again, see if they've got any other movement. Nope, still hanging around. Now, look, the next movement of this is going to come from the earnings call. Whatever is said on the earnings call, that's where we're going to go ahead and see a little bit of action. Race, what is that? Ferrari? That is Ferrari. Ferrari, a nice little move to the upside. Now, earnings was here. So what exactly happened to Ferrari for this beautiful move in the after hours? Someone let us know. That would be helpful. Let's go and take a look at Rivian, RIVN. Woo, to the downside. Chat, this stock was at like $180, I believe. Let's go ahead and take a look. Let's go ahead and take a look. Boom. $180. And now we're trading at about 13. Boy. Boy, oh boy, oh boy, oh boy, oh boy. We are down 93% on RIVN. I'm not holding it, so I'm not down. Maybe, maybe some of y'all are. Awesome. We've got Rivian right there. Shout out to our producer in the back making things happen. Let's go ahead and jump over to Etsy. Let's check out Etsy here. A little bit move to the upside, then coming on back down. Look at that. Producer's just on. You know what? Let's just test how quick he is. Okay, Chad, here we go. Ready? 3, 2, 1. Let's go ahead and take a look at Lucid, LCID. Wow. My man's got it. All right, one more. Let's go ahead and actually review Lucid, and then we can take a look at this one. I can't believe this stock is less than a $5 foot long, which is no longer a thing. But man, these stocks are just so beaten down. Who's purchasing Lucid at these levels? Who is purchasing Lucid at these levels? Quick reaction was to the downside, and then obviously we're trying to figure out if we're going to make a move to the upside or not. Let's see, what else? We're now going to check out the restaurant where women believe, or some women believe, that it's not okay to take them on a date. And that's going to be the Cheesecake Factory. Cheesecake Factory with a nice little move down. See, look at that. Apparently, men can't take women out to Cheesecake Factory for a date. We head on down on the cake. Ticker CAKE. Let's go back to, is Jack in the Box? Boy, I haven't had Jack in the Box in a minute. But let's go back to why y'all are really here. And that's NVIDIA. All right, cool. We're coming up to this trend line now. Are we going to blow past it or no? Are we going to blow past NVIDIA to the upside or no? By the way, if you want to check out some awesome article on NVIDIA, their earnings, the expectations, and all that good stuff, it's in the description. Make sure you go ahead and check that out. Let's see what we've got here. Boy, this is, just, here, we'll do our drawings again, how to do that. And then, of course, if we go ahead and check out my handy dandy Benzinga Pro, you can see the earnings coming out, and we have it obviously here on the bottom for y'all as well. EPS, you go ahead and beat that. That's like, what is that? About a 40-50 cent beat right there. Sales 1.5 billion. Can I just get $1 million to myself? That would be nice. And you know what the coolest part is? Their revenue guidance for Q1 in 2025, the expectations were already up here, but they said, nah, we're going to take it to the next level. So that's insane to me that they're able to do that. Chat, we might see NVIDIA 1,000 before the end of Q1. I don't know. It's going crazy right now. All right, now we got to go ahead and draw my my pretty lines again. Oops. By the way, my buddy Aaron Bree, I asked him what he went ahead. Let me show you guys. Let me see where the Slack is. Aaron Bree, right? He works here at Benzinga. Him and I talked early on today about, hey, are you betting to the upside or downside or whatever the case may be? He went ahead and took calls. He took everything calls. He bought Microsoft calls. He bought Rivian calls, and he got Lucid calls. Lucid, I think we saw was to the downside. Rivian, I think we saw was to the downside. Let's see what Microsoft is doing. And wow, would you look at this beauty? Look at this beauty. Just straight up touching our point of resistance on this trend line. I don't want to say rejects just yet, but still not able to get over it quite there. I did have downside. I purchased. So here's what I did, chat. I'm always transparent about my trades. I purchased, what is this? 424 puts. 424 puts expiring tomorrow on the QQQ. That's what I did. He took calls. I took puts. He's 0-2, but it looks like he might finally win as third time as a charm. We're 4 minutes away from the earnings call. In 4 minutes, you won't hear me. You'll go ahead and hear the earnings call and the executives on NVIDIA, and we will have the chart up for you so you can go ahead and see the movement that's happening. Let's go ahead and take a look at the minute. Again, crazy moves to the downside, comes right back up itself as well. I'm actually using an NVIDIA computer processing chip and all that good stuff right now. So, I used to have AMD. What is it called? Ryzen, I think it is. But then we went ahead and switched over to NVIDIA, especially when I do interviews. It's easy with their AI chip tracking that it works out. SMCI, yeah, this thing was just, let's see how that closes the week. But obviously, it's taking a bit of a whack the past couple of days, especially, what was that, on Friday? Yep, it was on Friday. But let's go back to NVIDIA. If there's any tickers that folks want to take a look at, let us know. We're about to get the earnings call on the way in about 3 minutes, but just a beautiful move to the upside. Apple, I don't know if anyone's downloaded Apple's Sport app. I think I was expecting big things. It doesn't look that great. It looks a little clunky. Doesn't look as customized as I would like for it to be, but nonetheless, nothing really there. AMAT. All right, let's check it out. Let's do some rapid fire quickly. If I can go ahead and get something. Boy, these gaps are insane. I don't know how I can trade that in terms of swinging something. You've obviously got support that's just been established there. Let's go to the hourly, right? So support right there. You break the 186. I think you can go ahead and place some puts if you wanted to. This is not financial advice. I can barely do CPR. I can't do CPR. 180 would be the next target personally on this one. Let's go ahead and take a look at MasterCard. What's MasterCard? That MC? No, it's not. What's MasterCard? What is MasterCard? MA. That's what it is. All right, we can go ahead and come on down here. But 2 minutes away from the earnings call. I'd say if we break 450, I think it's a clear move to the downside. I don't think there's any question about that one. Headed on down. That's what I'm kind of taking a look at there. If we go ahead and break that, let's take a look at Coinbase. Is there something else that we want to take a look at? Coinbase still waiting for that break above 193. If we can go ahead and get it to the upside. On the downside, I'm looking at 160 break. If we break 160, I'd be interested in playing this one intraday to the downside, whether that comes tomorrow, whatever the case may be. AI, we're less than 2 minutes away from the earnings call for NVIDIA. Let's see what we got. Let's see what we got. And again, if you haven't already gotten an eval account from Apex, you can scan that QR code. You can use that promo code Fever so you make me look really nice. It's 75% off right now, half price resets. And I know they've got some cool sales coming up from here on out as well. That's what I've got in terms of level 28 break to the upside on AI. And then let's go back to NVIDIA as we're about a minute away. And we will, we broke the trend line. Do we see all-time highs? What do you think, chat? Do we see all-time highs after this earnings call? Let me know. I'll tell you what, I got to bounce it like 20 seconds. We're going to show the chart while you get the earnings call as well. Spam 1 if you think we go all-time highs today. I'm going to take my spam 1 if you think we hit all-time highs today. Spam 2 if not. Best of luck, happy trading, and good luck on the earnings call, y'all. See ya.
Good afternoon. My name is Rob, and I will be your conference operator today. At this time, I would like to welcome everyone to the NVIDIA's fourth quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number one on your telephone keypad. If you would like to withdraw your question, press star one again. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the fourth quarter in fiscal 2024. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the first quarter of fiscal 2025. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, February 21st, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Simona. Q4 was another record quarter. Revenue of $22.1 billion was up 22% sequentially and up 265% year-on-year, and well above our outlook of $20 billion. For fiscal 2024, revenue was $60.9 billion and up 126% from the prior year. Starting with data center. Data center revenue for the fiscal 2024 year was $47.5 billion, more than tripling from the prior year. The world has reached a tipping point of new computing era. The $1 trillion installed base of data center infrastructure is rapidly transitioning from general purpose to accelerated computing. As Moore's law slows while computing demand continues to skyrocket, companies may accelerate every workload possible to drive future improvement in performance, TCO, and energy efficiency. At the same time, companies have started to build the next generation of modern data centers, what we refer to as AI factories, purpose-built to refine raw data and produce valuable intelligence in the era of generative AI. In the fourth quarter, data center revenue of $18.4 billion was a record, up 27% sequentially and up 409% year-on-year, driven by the Nvidia Hopper GPU computing platform, along with InfiniBand end-to-end networking. Compute revenue grew more than 5x, and networking revenue tripled from last year. We are delighted that supply of Hopper architecture products is improving. Demand for Hopper remains very strong. We expect our next generation products to be supply constrained as demand far exceeds supply. Fourth quarter data center growth was driven by both training and inference of generative AI and large language models across a broad set of industries, use cases, and regions. The versatility and leading performance of our data center platform enables a high return on investment for many use cases, including AI training and inference, data processing, and a broad range of CUDA accelerated workloads. We estimate in the past year, approximately 40% of data center revenue was for AI inference. Building and deploying AI solutions has reached virtually every industry. Many companies across industries are training and operating their AI models and services at scale. Enterprises across NVIDIA AI infrastructure through cloud providers, including hyperscales, GPU specialized, and private clouds, or on-premise. NVIDIA's computing stack extends seamlessly across cloud and on-premise environments, allowing customers to deploy with a multi-cloud or hybrid cloud strategy. In the fourth quarter, large cloud providers represented more than half of our data center revenue, supporting both internal workloads and external public cloud customers. Microsoft recently noted that more than 50,000 organizations use GitHub Copilot Business to supercharge the productivity of their developers, contributing to GitHub revenue growth accelerating to 40% year on year. And Copilot for Microsoft 365 adoption grew faster in its first 2 months than the 2 previous major Microsoft 365 Enterprise Suite releases did. Consumer internet companies have been early adopters of AI and represent one of our largest customer categories. Companies from search to e-commerce, social media, news and video services, and entertainment are using AI for deep learning-based recommendation systems. These AI investments are generating a strong return by improving customer engagement, ad conversation, and click-throughs rates. Meta, in its latest quarter, cited more accurate predictions and improved advertiser performance as contributing to the significant acceleration in its revenue. In addition, consumer internet companies are investing in generative AI to support content creators, advertisers, and customers through automation tools for content and ad creation, online product descriptions, and AI shopping assistance. Enterprise software companies are applying generative AI to help customers realize productivity gains. Early customers we've partnered with for both training and inference of generative AI are already seeing notable commercial success. ServiceNow's generative AI products in their latest quarter drove their largest ever net new annual contract value contribution of any new product family release. We are working with many other leading AI and enterprise software platforms as well, including Adobe, Databricks, Getty Images, SAP, and Snowflake. The field of foundation large language models is thriving. Anthropic, Google, Inflection, Microsoft, OpenAI, and xAI are leading with continued amazing breakthrough in generative AI. Exciting companies like Adept, AI21, Character AI, Cohere, Mistral, Perplexity, and Runway are building platforms to serve enterprises and creators. New startups are creating LLMs to serve the specific languages, cultures, and customs of the world's many regions. And others are creating foundation models to address entirely different industries, like recursion, pharmaceuticals, and generative biomedicines for biology. These companies are driving demand for Nvidia AI infrastructure through hyperscale or GPU specialized cloud providers. Just this morning, we announced that we collaborated with Google to optimize its state-of-the-art new Gemma language models to accelerate their inference performance on Nvidia GPUs in the cloud, data center, and PC. One of the most notable trends over the past year is the significant adoption of AI by enterprises across the industry verticals, such as automotive, healthcare, and financial services. NVIDIA offers multiple application frameworks to help companies adopt AI in vertical domains such as autonomous driving, drug discovery, low latency machine learning for fraud detection, or robotics, leveraging our full stack accelerated computing platform. We estimate that data center revenue contribution of the automotive vertical through the cloud or on-prem exceeded $1 billion last year. NVIDIA Drive infrastructure solutions include systems and software for the development of autonomous driving, including data ingestion, curation, labeling, and AI training, plus validation through simulation. Almost 80 vehicle manufacturers across global OEMs, new energy vehicles, trucking, robotaxi, and tier 1 suppliers are using NVIDIA's AI infrastructure to train LLMs and other AI models for automated driving and AI cockpit applications. In effect, nearly every automotive company working on AI is working with NVIDIA. As AV algorithms move to video transformers and more cars are equipped with cameras, we expect NVIDIA's automotive data center processing demand to grow significantly. In healthcare, digital biology and generative AI are helping to reinvent drug discovery, surgery, medical imaging, and wearable devices. We have built deep domain expertise in healthcare over the past decade, creating the NVIDIA Clara healthcare platform and NVIDIA BioNeMo, a generative AI service to develop, customize, and deploy AI foundation models for computer-aided drug discovery. BioNeMo features a growing collection of pre-trained biomolecular AI models that can be applied to the end-to-end drug discovery processes. We announced Recursion is making available for their proprietary AI model through BioNeMo for the drug discovery ecosystem. In financial services, customers are using AI for a growing set of use cases, from trading and risk management to customer service and fraud detection. For example, American Express improved fraud detection accuracy by 6% using NVIDIA AI. Shifting to our data center revenue by geography, growth was strong across all regions except for China, where our data center revenue declined significantly following the U.S. government export control regulations imposed in October. Although we have not received licenses from the U.S. government to ship restricted products to China, we have started shipping alternatives that don't require a license for the China market. China represented a mid-single-digit percentage of our data center revenue in Q4, and we expect it to stay in a similar range in the first quarter. In regions outside of the U.S. and China, sovereign AI has become an additional demand driver. Countries around the world are investing in AI infrastructure to support the building of large language models in their own language, on domestic data, and in support of their local research and enterprise ecosystems. From a product perspective, the vast majority of revenue was driven by our Hopper architecture, along with InfiniBand networking. Together, they have emerged as the de facto standard for accelerated computing and AI infrastructure. We are on track to ramp H200 with initial shipments in the second quarter. Demand is strong as H200 nearly doubles the inference performance of H100. Networking exceeded a $13 billion annualized revenue run rate. Our end-to-end networking solutions define modern AI data centers. Our quantum InfiniBand solutions grew more than 5x year on year. NVIDIA Quantum InfiniBand is the standard for the highest performance AI dedicated infrastructures. We are now entering the Ethernet networking space with the launch of our new Spectrum-X end-to-end offering, designed for an AI-optimized networking for the data center. Spectrum-X introduces new technologies over Ethernet that are purpose-built for AI. Technologies incorporated in our Spectrum switch, Bluefield, CPU, and software stack deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Leading OEMs, including Dell, HPE, Lenovo, and Supermicro, with their global sales channels, are partnering with us to expand our AI solution to enterprises worldwide. We are on track to ship Spectrum-X this quarter. We also made great progress with our software and services offerings, which reached an annualized revenue run rate of $1 billion in Q4. We announced that NVIDIA DGX Cloud will expand its list of partners to include Amazon's AWS, joining Microsoft Azure, Google Cloud, and Oracle Cloud. DGX Cloud is used for NVIDIA's own AI R&D and custom model development, as well as NVIDIA developers. It brings the CUDA ecosystem to NVIDIA CSP partners. Okay, moving to gaming. Gaming revenue was $2.87 billion, was flat sequentially and up 56% year on year. Better than our outlook on solid consumer demand for NVIDIA GeForce RTX GPUs during the holidays. Fiscal year revenue of $10.45 billion was up 15%. At CES, we announced our GeForce RTX 40 Super Series family of GPUs. Starting at $599, they deliver incredible gaming performance and generative AI capabilities. Sales are off to a great start. NVIDIA AI Tensor cores in the GPUs deliver up to 836 AI TOPS. Perfect for powering AI for gaming, creating, and everyday productivity. The rich software stack we offer with our RTX GPUs further accelerates AI. With our DLSS technology, 7 out of 8 pixels can be AI generated, resulting up to 4x faster ray tracing and better image quality. And with the Tensor RT-LLM for Windows, our open source library that accelerates inference performance for the latest large language models, generative AI can run up to 5x faster on RTX AI PCs. At CES, we also announced a wave of new RTX 40 series AI laptops from every major OEM. These bring high-performance gaming and AI capabilities to a wide range of form factors, including 14-inch and thin and light laptops. With up to 686 TOPS of AI performance, these next generation's AI PCs increase generative AI performance by up to 60x, making them the best performing AI PC platforms. At CES, we announced NVIDIA Avatar Cloud Engine microservices, which allow developers to integrate state-of-the-art generative AI models into digital avatars. ACE won several Best of CES 2024 awards. NVIDIA has an end-to-end platform for building and deploying generative AI applications for RTX PCs and workstations. This includes libraries, SDKs, tools, and services developers can incorporate into their generative AI workflows. NVIDIA is fueling the next wave of generative AI applications coming to the PC. With over 100 million RTX PCs in the installed base and over 500 AI-enabled PC applications and games, we are on our way. Moving to Pro Visualization. Revenue of $463 million was up 11% sequentially and up 105% year on year. Fiscal year revenue of $1.55 billion was up 1%. Sequential growth in the quarter was driven by a rich mix of RTX Ada architecture GPUs continuing to ramp. Enterprises are refreshing their workstations to support generative AI-related workloads such as data preparation, LLM fine-tuning, and retrieval augmented generation. These key industrial verticals driving demand include manufacturing, automotive, and robotics. The automotive industry has also been an early adopter of NVIDIA Omniverse as it seeks to digitalize workflows from design to build, simulate, operate, and experience their factories and cars. At CES, we announced that creative partners and developers, including Brickland, WPP, and ZeroLight, are building Omniverse-powered car configurators. Leading automakers like Lotus are adopting the technology to bring new levels of personalization, realism, and interactivity to the car buying experience. Moving to automotive. Revenue was $281 million, up 8% sequentially and down 4% year on year. Fiscal year revenue of $1.09 billion was up 21%, crossing the $1 billion mark for the first time on continued adoption of the NVIDIA Drive platform by automakers. NVIDIA Drive Orin is the AI car computer of choice for software-defined AV fleets. Its successor, NVIDIA Drive Thor, designed for vision transformers, often offers more AI performance and integrates a wide range of intelligent capabilities into a single AI compute platform, including autonomous driving and parking, driver and passenger monitoring, and AI cockpit functionality, and will be available next year. There were several automotive customer announcements this quarter. Li Auto, Great Wall Motor, Zeekr, the premium EV subsidiary of Geely, and Xiaomi EV all announced new vehicles built on Nvidia. Moving to the rest of the P&L. GAAP gross margins expanded sequentially to 76% and non-GAAP gross margins to 76.7% on strong data center growth and mix. Our gross margins in Q4 benefited from favorable component costs. Sequentially, GAAP operating expenses were up 6% and non-GAAP operating expenses were up 9%, primarily reflecting higher compute and infrastructure investments and employee growth. In Q4, we returned $2.8 billion to shareholders in the form of share repurchases and cash dividends. During fiscal year 24, we utilized cash of $9.9 billion towards shareholder returns, including $9.5 billion in share repurchases. Let me turn to the outlook for the first quarter. Total revenue is expected to be $24 billion, plus or minus 2%. We expect sequential growth in data center and ProViz, partially offset by seasonal decline in gaming. GAAP and non-GAAP gross margins are expected to be 76.3% and 77%, respectively, plus or minus 50 basis points. Similar to Q4, Q1 gross margins are benefiting from favorable component costs. Beyond Q1, for the remainder of the year, we expect gross margins to return to the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $3.5 billion and $2.5 billion, respectively. Fiscal year 2025 GAAP and non-GAAP operating expenses are expected to grow in the mid-30% range as we continue to invest in the large opportunities ahead of us. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $250 million, excluding gains and losses from non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight some upcoming events for the financial community. We will attend the Morgan Stanley Technology and Media and Telecom Conference in San Francisco on March 4th, and the TD Cowen's 44th Annual Healthcare Conference in Boston on March 5th. And of course, please join us for our annual GTC conference starting Monday, March 18th in San Jose, California. To be held in person for the first time in 5 years, GTC will kick off with Jensen's keynote, and we will host a Q&A session for financial analysts the next day, March 19th. We are now open the call for questions. Operator, would you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to one question. Your first question comes from the line of Toshiya Hari from Goldman Sachs. Your line is open.
Hi, thank you so much for taking the question and congratulations on the really strong results. My question is for Jensen on the data center business. Clearly, you're doing extremely well in the business. I'm curious how your expectations for calendar 24 and 25 have evolved over the past 90 days. And as you answer the question, I was hoping you can touch on, some of the newer buckets within data center, things like software, sovereign AI. I think you've been pretty vocal about how to think about that medium to long term. And recently there was an article about, NVIDIA potentially participating in the ASIC market. Is there any credence to that? And if so, how should we think about you guys playing in that market over the next several years? Thank you.
Thanks, Toshiya. Let's see. There were 3 questions. One more time. First question was, can you?
Sovereign AI.
Well,
I guess your expectations for data center, how they've evolved. Thank you.
Okay. Yeah. Well, we guide 1 quarter at a time, but fundamentally the conditions are excellent for continued growth, calendar 24 to calendar 25 and beyond. And let me tell you why. We're at the beginning of 2 industry-wide transitions, and both of them are industry-wide. The first one is a transition from general to accelerated computing. General purpose computing, as you know, is starting to run out of steam, and you could tell by the CSPs extending, and many data centers, including our own for general purpose computing, extending the depreciation from 4 to 6 years. There's just no reason to update with more CPUs when you can't fundamentally and dramatically enhance its throughput like you used to. And so you have to accelerate everything. This is what NVIDIA has been pioneering for some time. And with accelerated computing, you can dramatically improve your energy efficiency. You can dramatically improve your cost in data processing by 20 to 1. Huge numbers. And of course, the speed. That speed is so incredible that we enabled a second industry-wide transition called generative AI. Generative AI, I'm sure we're going to talk plenty about it during the call. But remember, generative AI is a new application. It is enabling a new way of doing software, new types of software being created. It is a new way of computing. You can't do generative AI on traditional general purpose computing. You have to accelerate it. And the third is it is enabling a whole new industry. And this is something worthwhile to take a step back and look at, and it connects to your last question about sovereign AI. A whole new industry in the sense that for the very first time, a data center is not just about computing data and storing data and serving the employees of a company. We now have a new type of data center that is about AI generation, an AI generation factory. And you've heard me describe it as AI factories. But basically, it takes raw material, which is data, it transforms it with these AI supercomputers that NVIDIA builds, and it turns them into incredibly valuable tokens. These tokens are what people experience on the amazing ChatGPT or Midjourney or search these days are augmented by that. All of your recommender systems are now augmented by that. The hyper personalization that goes along with it. All of these incredible startups in digital biology, generating proteins and generating chemicals, and the list goes on. And so all of these tokens are generated in a very specialized type of data center. And this data center we call AI supercomputers and AI generation factories. But we're seeing diversity. One of the other reasons, so at the foundation is that the way it manifests into new markets is in all of the diversity that you're seeing us in. One, the amount of inference that we do is just off the charts now. Almost every single time you interact with ChatGPT, you know that we're inferencing. Every time you use Midjourney, we're inferencing. Every time you see amazing these Sora videos that are being generated, or Runway, the videos that they're editing, Firefly, NVIDIA is doing inferencing. The inference part of our business has grown tremendously. We estimate about 40%. The amount of training continuing because these models are getting larger and larger. The amount of inference is increasing. But we're also diversifying into new industries. The large CSPs are still continuing to build out. You could see from their CapEx and their discussions. But there's a whole new category called GPU specialized CSPs. They specialize in NVIDIA AI infrastructure, GPU specialized CSPs. You're seeing enterprise software platforms deploying AI. ServiceNow is just a really, really great example. You see Adobe, you see others, SAP and others. You see consumer internet services that are now augmenting all of their services of the past with generative AI, so they can have even more hyper-personalized content to be created. You see us talking about industrial generative AI. Now our industries represent multi-billion-dollar businesses. Auto, health, financial services, in total, our vertical industries are multi-billion-dollar businesses now. And of course, sovereign AI. The reason for sovereign AI has to do with the fact that the language, the knowledge, the history, the culture of each region are different. And they own their own data. They would like to use their data, train it to create their own digital intelligence, and provision it to harness that raw material themselves. It belongs to them. Each one of the regions around the world, the data belongs to them. The data is most useful to their society. And so they want to protect the data. They want to transform it themselves, value-added transformation into AI, and provision those services themselves. So we're seeing sovereign AI infrastructures being built in Japan, in Canada, in France, so many other regions. And so my expectation is that what is being experienced here in the United States, in the West, will surely be replicated around the world. And these AI generation factories are going to be in every industry, every company, every region. And so I think this last year we've seen generative AI really becoming a whole new application space, a whole new way of doing computing, a whole new industries being formed, and that's driving our growth.
Your next question comes from a line of Joe Moore from Morgan Stanley. Your line is open.
Great, thank you. I wanted to follow up on the 40% of revenues coming from inference. That's a bigger number than I expected. Can you give us some sense of, where that number was, maybe the year before, how much you're seeing growth around LLMs from inference, and how are you measuring that? Is that, I assume it's in some cases the same GPUs you use for training and inference. How solid is that measurement? Thank you.
I'll go backwards. The estimate is probably understated, but we estimated it, and let me tell you why. Whenever a year ago, the recommender systems that people are, when you run the internet, the news, the videos, the music, the products that are being recommended to you, because as you know, the internet has trillions, I don't know how many trillions, but trillions of things out there, and your phone is, 3 inches squared, and so the ability for them to fit all of that information down to something such a small real estate is through a system, an amazing system called recommender systems. These recommender systems used to be all based on CPU approaches, but the recent migration to deep learning and now generative AI has really put these recommender systems now directly into the path of GPU acceleration. It needs GPU acceleration for the embeddings. It needs GPU acceleration for the nearest neighbor search. It needs GPU acceleration for the re-ranking, and it needs GPU acceleration to generate the augmented information for you. So GPUs are in every single step of a recommender system now. And as you know, recommender system is the single largest software engine on the planet. almost every major company in the world has to run these large recommender systems. Whenever you use ChatGPT as being inference, whenever you hear about Midjourney and the number of things that they're generating for consumers, when you see Getty, the work that we do with Getty and Firefly from Adobe, these are all generative models. The list goes on, and none of these, as I mentioned, existed a year ago. 100% new.
Your next question comes from a line of Stacy Rasgon from Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. Colette, I wanted to touch on your comment that you expected the next generation of products, I assume that meant Blackwell, to be supply constrained. Can you dig into that a little bit? What is the driver of that? Why does that get constrained as Hopper is easing up? And how long do you expect that to be constrained? Like, do you expect the next generation to be constrained like all the way through calendar 25? Like, when do those start to ease?
Yeah, the first thing is overall our supply is improving. Overall, our supply chain is just doing an incredible job for us. Everything from, of course, the wafers, the packaging, the memories, all of the power regulators, to transceivers and networking and cables and you name it. The list of components that we ship, as you know, people think that NVIDIA GPUs is like a chip, but the NVIDIA Hopper GPU has 35,000 parts. It weighs 70 pounds. These things are really complicated things. We built, people call it an AI supercomputer for good reason. If you ever look in the back of the data center, the systems, the cabling system is mind-boggling. It is the most dense, complex cabling system for networking the world's ever seen. Our InfiniBand business grew 5x year over year. The supply chain is really doing fantastic supporting us. And so overall, the supply is improving. We expect the demand will continue to be stronger than our supply provides, and through the year. And we'll do our best. The cycle times are improving, and we're going to continue to do our best. However, whenever we have new products, as you know, it ramps from 0 to a very large number, and you can't do that overnight. You know, everything is ramped up. It doesn't step up. And so whenever we have a new generation of products, and right now we are ramping H200s, there's no way we can reasonably keep up on demand in a short term as we ramp. We're ramping Spectrum X. We're doing incredibly well with Spectrum X. It's our brand new product into the world of Ethernet. InfiniBand is the standard for AI dedicated systems. Ethernet with Spectrum X. Ethernet is just not a very good scale-out system. But with Spectrum X, we've augmented, layered on top of Ethernet, fundamental new capabilities like adaptive routing, congestion control, noise isolation or traffic isolation, so that we can optimize Ethernet for AI. And so InfiniBand will be our AI dedicated infrastructure. Spectrum X will be our AI optimized networking, and that is ramping. And so we'll with all of new products, demand is greater than supply, and that's just kind of the nature of new products. And we work as fast as we can to catch up with the demand. But overall, net, our supply is increasing very nicely.
Your next question comes from the line of Matt Ramsey from TD Cowen. Your line is open.
Good afternoon, Jensen, Colette. Congrats on the results. I wanted to ask, I guess, a two-part question, and it comes at what Stacy was just getting at on your demand being significantly more than your supply, even though the supply is improving. And I guess the two sides of the question are, I guess, first for Colette, like, how are you guys thinking about allocation of product in terms of customer readiness to deploy and sort of monitoring if there's any kind of buildup of product that might not yet be turned on. And then I guess, Jensen, for you, I'd be really interested to hear you speak a bit about the thought that you and your company are putting into the allocation of your product across customers, many of which compete with each other, across industries to smaller startup companies, to things in the healthcare arena, to government. It's a very, very unique technology that you're enabling, and I'd be really interested to hear you speak a bit about how you think about quote unquote fairly allocating sort of for the good of your company, but also for the good of the industry. Thanks.
Let me first start with your question, thanks, about how we are working with our customers as they look into how they are building out their GPU instances and our allocation process. The folks that we work with, our customers that we work with, have been partners with us for many years as we have been assisting them both in what they set up in the cloud as well as what they are setting up internally. Many of these providers have multiple products going at one time to serve so many different needs across their end customers, but also what they need internally. So they are working in advance, of course, thinking about those new clusters that they will need. And our discussions with them continue, not only on our Hopper architecture, but helping them understand the next wave and getting their interest and getting their outlook for the demand that they want. So it's always a moving process in terms of what they will purchase, what is still being built, and what is in use for end customers. But the relationships that we've built and their understanding of the sophistication of the build has really helped us with that allocation and both helped us with our communications with them.
First, our CSPs have a very clear view of our product roadmap and transitions. And that transparency with our CSPs gives them the confidence of which products to place and where and when. And so they know the timing to the best of our ability, and they know quantities, and of course allocation. We allocate fairly. Do the best we can to allocate fairly, and to avoid allocating unnecessarily. As you mentioned earlier, why allocate something when a data center is not ready? Nothing is more difficult than to have anything sit around. And so allocate fairly and to avoid allocating unnecessarily. And the question that you asked about the end markets, you know that we have an excellent ecosystem with OEMs, ODMs, CSPs, and very importantly, end markets. What NVIDIA is really unique about is that we bring our customers, we bring our partners, CSPs and OEMs, we bring them customers. The biology companies, the healthcare companies, financial services companies, AI developers, large language model developers, autonomous vehicle companies, robotics companies. There's just a giant suite of robotics companies that are emerging. They're warehouse robotics to surgical robotics to humanoid robotics, all kinds of really interesting robotics companies, agricultural robotics companies. All of these startups, large companies, healthcare, financial services, and auto and such, are working on NVIDIA's platform. We support them directly. And oftentimes, we can have a twofer by allocating to a CSP and bringing the customer to the CSP at the same time. And so this ecosystem, you're absolutely right that it's vibrant, but at the core of it, we want to allocate fairly. with avoiding waste and looking for opportunities to connect partners and end users. We're looking for those opportunities all the time.
Your next question comes from the line of Timothy Arcuri from UBS. Your line is open.
Thanks a lot. I wanted to ask about how you're converting backlog into revenue. Obviously, lead times for your products have come down quite a bit. Colette, you didn't talk about the inventory purchase commitments, but if I sort of add up your inventory plus the purchase commits and your prepaid supply, sort of the aggregate of your supply, it was actually down a touch. How should we read that? Is that just you saying that you don't need to make as much of a financial commitment to your suppliers because the lead times are lower, or is that maybe you're reaching some sort of steady state where you're closer to filling your order book and your backlog? Thanks.
Yeah, so let me highlight on those three different areas of how we look at our suppliers. You're correct, our inventory on hand, given our allocation that we're on, we're trying to, as things come into inventory, immediately work to ship them to our customers. I think our customer appreciates our ability to meet the schedules that we've looked for. The second piece of it is our purchase commitments. Our purchase commitments have many different components into it, components that we need for manufacturing, but also often we are procuring capacity that we may need. The lengths of that need for capacity or the length for the components are all different. Some of them may be for the next 2 quarters, but some of them may be for multiple years. I can say the same regarding our prepaids. Our prepaids are pre-designed to make sure that we have the reserved capacity that we need at several of our manufacturing suppliers as we look forward. So wouldn't read into anything regarding approximately about the same numbers as we are increasing our supply. All of them just have different lengths as we have sometimes had to buy things in long lead times or things that needed capacity to be built for us.
Your next question comes from a line of Ben Reitz from Melius Research. Your line is open.
Yeah, thanks. Congratulations on the results. Colette, I wanted to talk about your comment regarding gross margins and that they should go back to the mid-70s. If you don't mind unpacking that. And also, is that due to the HBM content in the new products? And what do you think are the drivers of that comment? Thanks so much.
Yeah, thanks for the question. We highlighted in our opening remarks really about our Q4 results and our outlook for Q1. Both of those quarters are unique. Those 2 quarters are unique in their gross margin as they include some benefits from favorable component costs in the supply chain, kind of across both our compute and networking, and also in several different stages of our manufacturing process. So looking forward, we have visibility into a mid-70s gross margin for the rest of the fiscal year, taking us back to where we were before this Q4 and Q1 peak that we've had here. So we're really looking at just a balance of our mix. Mix is always going to be our largest driver of what we will be shipping for the rest of the year, and those are really just the drivers.
Your next question comes from a line of CJ Muse from Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. Bigger picture question for you, Jensen. When you think about the million-X improvement in GPU compute over the last decade and expectations for similar improvements in the next, how do your customers think about the long-term usability of their NVIDIA investments that they're making today? Do today's training clusters become tomorrow's inference clusters? How do you see this playing out? Thank you.
Hey, CJ, thanks for the question. Yeah, that's the really cool part. If you look at the reason why we're able to improve performance so much, it's because we have 2 characteristics about our platform. One is that it's accelerated, and 2, it's programmable. It's not brittle. NVIDIA is the only architecture that has gone from the very, very beginning, literally the very beginning when CNNs and Alex Kershevsky and Ilya Sutskever and Jeff Hinton first revealed AlexNet. all the way through RNNs to LSTMs to RLs to deep learning RLs to transformers to every single version and every species that have come along, vision transformers, multimodality transformers, that every single, and then now time sequence stuff, every single variation, every single species of AI that has come along, we've been able to support it, optimize our stack for it, and deploy it into our installed base. This is really the great, amazing part. On the one hand, we can invent new architectures and new technologies like our tensor cores, like our transformer engine for tensor cores, improve new numerical formats and structures of processing like we've done with the different generations of tensor cores, meanwhile supporting the installed base at the same time. And so as a result, we take all of our new software algorithm inventions, all of the new inventions of models of the industry, and it runs on our installed base on the one hand. On the other hand, whenever we see something revolutionary, we can, like transformers, we can create something brand new, like the Hopper transformer engine, and implement it into future. And so we simultaneously have this ability to bring software to the installed base and keep making it better and better and better. So our customers' installed base is enriched over time with our new software. On the other hand, for new technologies, create revolutionary capabilities. Don't be surprised if in our future generation, all of a sudden, amazing breakthroughs in large language models were made possible. And that those breakthroughs, some of which will be in software because they run CUDA, will be made available to the installed base. And so we carry everybody with us on the one hand, we make giant breakthroughs on the other hand.
Your next question comes from a line of Aaron Rakers from Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I wanted to ask about the China business. I know that in the prepared comments, you said that you started shipping some alternative solutions into China. You also pointed out that you expect that contribution to continue to be about a mid-single digit percent of your total data center business. So I guess the question is what is the extent of products that you're shipping today into the China market? And why should we not expect that, maybe other alternative solutions come to the market and expand your breadth to participate in that opportunity again? Thank you.
At the core, remember, the U.S. government wants to limit the latest capabilities of NVIDIA's accelerated computing and AI to the Chinese market. And the U.S. government would like to see us be as successful in China as possible. Within those two constraints, within those two pillars, if you will, are the restrictions. And so we had to pause when the new restrictions came out. We immediately paused so that we understood what the restrictions are, reconfigured our products in a way that is not software hackable in any way. And that took some time. And so we reset our product offering to China, and now we're sampling to customers in China. And we're going to do our best to compete in that marketplace and succeed in that marketplace within the specifications of the restriction. And so that's it. This last quarter, our business significantly declined as we paused in the marketplace. We stopped shipping in the marketplace. We expect this quarter to be about the same. But after that, hopefully we can go compete for our business and do our best, and we'll see how it turns out.
Your next question comes from a line of Harsh Kumar from Piper Sandler. Your line is open.
Yeah, hey, Jensen, Colette, and NVIDIA team. First of all, congratulations on a stunning quarter and guide. I wanted to talk about a little bit about your software business, and it's pleasing to hear that it's over $1 billion. But I was hoping, Jensen or Colette, if you could just help us understand what the different parts and pieces are for the software business. In other words, just help us unpack it a little bit so we can get a better understanding of where that growth is coming from.
Let me take a step back and explain the fundamental reason why NVIDIA will be very successful in software. So first, as you know, accelerated computing really grew in the cloud. In the cloud service providers have really large engineering teams, and we work with them in a way that allows them to operate and manage their own business. And whenever there are any issues, we have large teams assigned to them, and their engineering teams are working directly with our engineering teams, and we enhance, we fix, we maintain, we patch the complicated stack of software that's involved in accelerated computing. As you know, accelerated computing is very different than general purpose computing. You're not starting from a program like C++, you compile it and things run on all your CPUs. The stacks of software necessary for every domain, from data processing, SQL structured data versus all the images and text and PDF, which is unstructured, to classical machine learning, to computer vision, to speech, to large language models, all of recommender systems. All of these things require different software stacks. That's the reason why NVIDIA has hundreds of libraries. If you don't have software, you can't open new markets. If you don't have software, you can't open and enable new applications. Software is fundamentally necessary for accelerated computing. This is the fundamental difference between accelerated computing and general purpose computing that most people took a long time to understand. And now people understand that the software is really key. In the way that we work with CSPs, that's really easy. We have large teams that are working with their large teams. However, now that generative AI is enabling every enterprise and every enterprise software company to embrace accelerated computing. And when it is now essential to embrace accelerated computing because it is no longer possible, no longer likely anyhow, to sustain improved throughput through just general purpose computing. All of these enterprise software companies and enterprise companies don't have large engineering teams to be able to maintain and optimize their software stack to run across all of the world's clouds and private clouds and on-prem. So we are going to do the management, the optimization, the patching, the tuning, the install base optimization for all of their software stacks. And we containerize them into our stack. We call it NVIDIA AI Enterprise. And the way we go to market with it is think of that NVIDIA AI Enterprise now as a runtime, like an operating system. It's an operating system for artificial intelligence. And we charge $4,500 per GPU per year. And my guess is that every enterprise in the world, every software enterprise company that are deploying software in all the clouds and private clouds and on-prem will run on NVIDIA AI Enterprise, especially, obviously, for our GPUs. And so this is going to likely be a very significant business over time. We're off to a great start, and Colette mentioned that it's already at $1 billion run rate, and we're really just getting started.
Thank you. I will now turn the call back over to Jensen Huang, CEO, for closing remarks.
The computer industry is making two simultaneous platform shifts at the same time. The $1 trillion installed base of data centers is transitioning from general purpose to accelerated computing. Every data center will be accelerated so the world can keep up with the computing demand with increasing throughput while managing cost and energy. The incredible speed up of NVIDIA enabled a whole new computing paradigm, generative AI, where software can learn, understand, and generate any information, from human language to the structure of biology and the 3D world. We are now at the beginning of a new industry where AI-dedicated data centers process massive raw data to refine it into digital intelligence. Like AC power generation plants of the last industrial revolution, NVIDIA AI supercomputers are essentially AI generation factories of this industrial revolution. Every company in every industry is fundamentally built on their proprietary business intelligence, and in the future, their proprietary generative AI. Generative AI has kicked off a whole new investment cycle to build the next $1 trillion of infrastructure of AI generation factories. We believe these two trends will drive a doubling of the world's data center infrastructure installed base in the next 5 years, and will represent an annual market opportunity in the hundreds of billions. This new AI infrastructure will open up a whole new world of applications not possible today. We started the AI journey with the hyperscale cloud providers and consumer internet companies. And now every industry is on board, from automotive to healthcare, to financial services, to industrial, to telecom, media and entertainment. NVIDIA's full stack computing platform with industry-specific applications frameworks and a huge developer and partner ecosystem gives us the speed, scale, and reach to help companies in every industry become an AI company. We have so much to share with you at next month's GTC in San Jose, so be sure to join us. We look forward to updating you on our progress next quarter.
This concludes today's conference call. You may now disconnect.
Usually we go ahead and end the call, but I'm going to go ahead and take a look at the charts. We'll hang out for a little bit. You guys are more than welcome to talk some charts with me. I can review some things with you. I know, producer, you can hop off if you want to, man. I'll go ahead and end the stream. Slack me if you need me to do anything, but let's go ahead and take a look at a couple of charts, shall we? By the way, I had to go ahead and get this message across. You can see that we had a banner for 71% promo, but you just had Apex at 6 o'clock that released a 90% off and a 1-day pass. Make sure you go ahead and scan the QR code or use promo code FEVER. It obviously helps me out here on the stream. Makes us look really good. But speaking of which, let's go ahead and kind of, how do I do this? There we go. Let's go and take a look at some charts. You had all-time highs, which I believe was about 7. Our producer in the back is having a great time. He's out there in like Spain. But anyway, you had all-time highs here. I think it was like, what was it, 746.11? So close. I think we got to 746, 745.99 is your high. So we did not hit all-time highs. Excuse me. We did not hit all-time highs on the call. And now we, again, I think I told you guys and gals before that on this call, people were expecting in terms of on the earnings, about an 11% move, right? So if we went ahead and we had, let's go to the 15-minute. If we ended, where do we end? Right here. This move is about an 11% move. That's almost right where it went. We're about 0.5% off. So that's where it went. And then it came back down. We'll see what happens tomorrow, right? Let's go and take a look at a couple of other things as well. Let's take a look at ARM. ARM is within this range, man. We've been in this range for how long, chat? Since Valentine's Day, which I hope some of you actually, did some nice things with your significant other or yourself. But look at how long this has kind of been in consolidation. I'm telling you, if you're an intraday trader, if you're a day trader, if you're a swing trader, mark these levels on your chart right now. Open it up, mark your levels. And let's see where it goes. Even in after hours, it couldn't get past 136. That's going to be a key resistant point. If we can break to the upside, you know what? Here's what I'm going to do, chat. We're going to have some fun with this one. By the way, my name is Nate. I'm one of the hosts here at Benzinga. I lead the video program, so we got a lot more of these coming up. We've actually got some cool stuff for our next earnings. We're going to have debates, conversations, a whole shebang. We're going to go ahead and do it for y'all. But for now, where is my text box? Call grandma. Tell her to buy calls. That's what I'm doing. Again, this is just for entertainment purposes. Please do not take this seriously. I barely know how to do CPR. I don't know how to do CPR. But if this goes ahead and breaks to the upside, I'm going to go ahead and see if we can grab some puts, some calls, and see if we can march on over to the 140s, 150s, and maybe we even break all-time highs of 163. Spam 1 in the chat if you're going to go ahead and call grandma if we break 136. Let me know. Let me know what y'all are thinking. Similar story to the downside, of course, is where you grab puts if we break the 116, 115 area. Let's go ahead and take a look at the futures because, man, we were ripping. Let's go ahead and move this out. I lost money here, right? On the future side of things, I like to trade on the 15. So I'll go ahead and chart things up on like the 65 and the 4 hours, but I lost money on this one. I got short on this break. I unfortunately was waiting for a nice little move to the downside even further. It's about the 17,300s. Did I get greedy? 100% I did. I mean, look at my name. It's in my blood to be greedy. Downside move all the way to 17.3 didn't come. Then it just kind of stopped me out. That was a terrible, terrible job by me. I set my stops, thankfully, but I didn't set my limit order. So for profit taking, I was up about 1,000. So instead of being up 1,000, I lost 1,000. But it was okay because it was an eval account by Apex, or that I purchased from Apex, which again, they've got a 90% off sale going on right now. Use the promo code FEVER and they will hook you up and they'll get you taken care of. I'm just going to quickly share. Look at that. 90% off and a 1-day pass. I'm telling you, you want to go ahead, scan the QR code. They'll take care of you. Use the promo code FEVER and you can trade some futures with someone else's money. If you pass the eval, it's a much needed advantage. At least I believe it is. Anyway, let's look at the 65-minute on the NQ and how many bounces we had. 1, 2, 3, hit it, rejected it, hit it, rejected it again, and we'll see how tomorrow performs around this 17.8 area. Let's see how it happens. Let's see what kind of action we get on the 17.8. I'm going to hop off here in the next 5 minutes. What are some charts y'all want me to take a look at before we hop off? And by the way, we always talk about support, resistance. I don't know what happened at 2 o'clock, or excuse me, not this candle here, but 2 o'clock or so. Where's 2 o'clock? It just kind of wicked me out. But you had a jump. You broke the trend line on the 15-minute 330. You tested it, and you just went ahead and had a nice little move. How big is this move here? Almost a 50-point ripper to the upside in 15 minutes. INTC. Let's take a look. Head and shoulders where? On the daily, the 65? What are you looking at? I see where you're trying to get to in terms of consolidation. You obviously have higher highs that are being made here, right? So let's take a look. You've got 1. You've got 2. And you've got 3. Pretty simple enough. I think you've got your support right there around 43 bucks. If it breaks 43 bucks, I think you can knock on the door of 42, which is kind of like the next support area down here. You could. It's just not the cleanest one that I've seen. Now, here's something else. Let's go ahead and take out their drawings. If we go ahead and breach this 45.50 area, call it 45.50, all right? You've got yourself a beautiful gap. And where are my... I got to add my indicators again. Let's add gap. Let's add my boy Ripster, if I can spell his name right. Let's add a little bit of VWAP action. I don't know where these things went, but anyway. We don't need this many crazy things for now, so we'll take them away. But you've got yourself a gap if you can go ahead and clear this 45.50 area to the upside. All right. So that's what I'm taking a look at. I'll take a look at maybe a couple more stocks, and I'm going to go ahead and bounce out of here. Anybody else? Going once. Going twice. All right. I'm going to bounce. Want to show love one more time to Apex Trader Funding. 90% off if you use the promo code FEVER. You pass an eval account. You can pass it in one day. You don't have to wait 7 days or anything like that. You can pass it in one day. So if you go ahead and trade tomorrow on Thursday, you pass it, you meet your profit targets. On Friday, you could trade with a funded account on the futures side. Now, I'm telling you, futures is a lot of fun. I love trading futures. That's exactly what I'm going to do. I've got myself a funded account. I passed the eval today. That's what I'm going to do. Appreciate y'all for hanging out. Take care. We'll be back tomorrow morning, 8 o'clock, pre-market prep. Joel, Dennis, AB, they do a fantastic job. Then from 9 to 11, we have live trading with Ryan 13. They do a killer job as well. And then I will be back on at about 11 with Options Sandy to go ahead and kind of talk some options, talk some trading, and we'll kind of walk you through everything as well. Appreciate y'all for joining. Till next time.